Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Thursday. We got some economic reports to deal with today, which is going to be nice. And yeah, I'm sorry I'm late. You know when I'm a little bit late like this. Well, I guess I'm not that late. I've been later earlier other days of the week, but I'm thinking about stuff, right? That's really what happens. Is I get stuck in my thoughts in the shower or while I'm eating, and not get ready as quickly as I'm supposed to. Okay, let's go to the charts here real quick. The big thing I'm seeing here is that the Treasury just continues to go lower, and the yields are rising, and it's really just it's not stopping. Okay, now over here in the ES, things were looking pretty good. Oh, we had an okay day yesterday, right? It wasn't super great, but then there was an auction, okay, which was about when the Treasury started falling here, right? Oh, actually, it was over here, okay? There was a 20-year auction that was just absolutely dismal, the largest tail ever. And after that, equity markets just kind of went sideways. Also, Tesla reported, which tends to be a really big barometer of like risk taking out in the market. And even though they beat on both top and bottom line estimates, some of their forward projections were not very favorable, and the market is punishing them today. So we've seen overnight moves. There's also some Evergrande in China not doing so bad, etc., etc. Sorry, not doing so well. We got oil pushing higher. Holy cow. Popping up above 84 there. Natural gas, though, not picking up yet. So I think as long as people can heat their homes, we're probably okay, right? Well, gold actually was able to hold some of its gains yesterday. So it's not super great, but silver giving back a little bit of its gains, but that was a super great one. And copper finally coming back. I mean, after the big run that copper had, though, you'd expect they're going to have to stabilize a little bit, even if they were going to go higher. And I don't know if they will or not. And we come over here. Let's do the dollar first. I hate it. I can't see the bottom bar when I do that. Okay. So here you can see the dollar. The dollar's still a little bit weak, but it's recovering a little bit overnight because, there's some risk aversion out there. And the Bitcoins, when you come down to today, yesterday, popping up above the 6,500 and looking pretty good. I do not see this lasting long. So apparently, the Mt. Gox case is like they have a plan to compensate all of the investors, and they're going to sell all of the Bitcoin that they still own and then give the money back to the investors in dollars is what's going to happen. And that is they're supposed to like approve that and start that in November. So once you realize that, and remember, that is why we crashed in 2016. Like, Tether tried to hold the price, but then there's these guys out there. This one guy, the custodian of the Mt. Gox funds, was selling a substantial portion, and that pushed the market down. So, this bubble in Bitcoin probably can't last to the end of the year. Good morning, TLA trader. Should the interest rate go down if we get some bad numbers? Can we see someone caught if the interest rate falls? Well, by the way, let me turn on Financial Juice here. So what do we get? We get U.S. initial jobless claims. We're looking for 297,000 versus a previous reading of 293. I would not expect that number to be all that far off from the estimate. If it was bad, you might see rates come down a little bit, but I think that the calculus in terms of rates rising and everything has changed a little bit because of the inflation, right? What's happening is the market is more concerned about the inflation. And so they're worried that we're going to enter into an environment where the economy is not really doing all that well, but Federal Reserve still has to raise interest rates, right? So that's why you're seeing this curve flattening. So, we could YOLO it here. We get 10 seconds, but I don't think it's worth it. I don't think it's worth it. And I got to take a bet on it. Let's just see what number comes out. If it's like really, really bad, really high, then maybe we'll try doing something. Okay, so 290. So it's lower than the forecast, but not by much. Now, what about U.S. Philly Fed? We're looking for a reading of 25, and we got 23.8. So that's not good either. Both numbers bad, not ridiculously so. I could see yields backing up a little bit here. Let's see what happens. I'm actually feeling good. Last night I did not sleep super well because the baby was like a wide awake. Like how do you sit in bed for like 4 hours and still be awake? But that's what happened last night because it was like 1 o'clock and he was still awake. So I didn't feel like I slept super well. So I'm like a little adverse of trading because of that. Even though, when there's a good opportunity, I take it and things work out, right? But I feel no desire to take a trade off of that news, and so I'm happy because I kind of don't want to trade today. Actually, this whole week, I've kind of, noticed I've kind of been a little bit adverse to trying to take trades. So even though, there was some good opportunity this week, but most of the opportunity came after we were done, right? Which is really frustrating. But that's the way it's going. No, what's on my mind is this freaking Tether thing. Is the dollar moving? I don't know. You mean he did get a little bit of a pop there, but it's already fading. And some significant downticks there. What are we seeing? I'm seeing the 6J moving here a little bit with it. So keep an eye on that. And so I made a video earlier in the week, basically calling out the CFTC investigation about Tether. It was actually quite alarming to me because somebody made a video about how come Bitcoin is moving up even though there's no Google search interest? That must mean that there's more room to run, right? And so I came in and I said, well, the reason why price is going up even though there's no Google search interest is because they're printing money with Tether, right? So I went through and I showed, okay, here's how we know that this is actually happening and this is why it's moving price, right? And the creator of the original video that I had stitched, he commented on it and he said, interesting. Oh, that's interesting to you, is it? Like, it was really alarming to me that somebody who is he's not like somebody pretending to be like a huge expert or anything like that. So we should give him the benefit of the doubt. He seems like a nice guy, but like, I couldn't believe that he didn't know this, or at least that he was acting like he didn't know this. But the thing that bothered me is that then people come in and they start saying, well, yeah, but what Tether is doing is no different than what the US banks do. No, it is so, this is like such a stupid argument. Like, I don't understand how anybody could be so willfully stupid to think that it's the same thing as like what banks do. Okay, like a bank, they take deposits. You give them money, they have those deposits. They're supposed to keep 10% of those deposits there at the bank, and then the other 90% they can loan out to people. Okay, but when you're loaning that money out to people, that's like real money that they had that was created by deposits. Now, the Federal Reserve can create deposits, right? So if the Federal Reserve came in and they gave you $1 billion in deposits, then you would be able to loan 900 million of that back out, because you still have to keep 10%. Okay, that's not what Tether does. They literally create money out of thin air. Because when you give them money, they then turn around and loan you Tether. So they can't like loan you Tether and then at the very same time use the dollars that you've put out to go and loan to people. And then on top of that, the amount that they're loaning is more than what they've been given. Okay, they do not have $62 billion. They just don't. Okay, it's not even close to that. But I'm like struggling because I'm sitting here thinking like, okay, I could explain how loaning and fractional reserve banking works, but like that's not going to catch people's interest in a TikTok, and that's not going to convince the person that is that willfully stupid, right, Dave? We used to call that fraud, but now, yeah. It's just like, what? So I'm trying to think of like how do I make a convincing argument? Like, I think that's the most correct argument, but I just don't think that it would attract any attention or convince anybody. So I'm like trying to go through my head like what is the best way to explain this? Because it's just like, well, okay, so first of all, a bank is a heavily regulated entity that is so important to the economy that there is an entire committee in Congress to deal with banking. Okay, and Tether is like 3 guys in the Cayman Islands. Okay, there's your first problem. And then, like, the other thing that boggles my mind about this argument is that I was like, okay, they said that they are not a regulated entity. Remember, the whole thing was that they delayed things for like a year by just saying that that the New York Attorney General had no jurisdiction over them. But then now you're saying, oh, actually they are a bank. So then that whole argument was really just BS to delay, wasn't it? Really? Well, of course we always knew that, but you know, this thing is it's like the stages of grief, right? They can't do denial anymore. Now they're trying to bargain, right? But then the other crazy thing to me isn't the whole reason that you made Bitcoin and that you guys all like it is because you don't like what the banks do, you don't like that the Federal Reserve prints money, and now this entire ecosystem, Bitcoin, is literally based on printing money. If Tether did not exist, Bitcoin would not be at $65,000, period. It wouldn't be anywhere close to that. It would still be like $10,000. I'm not even kidding. There has never been a time. Think about this. Like really. I'm sure a lot of people will disagree with me, but it is the unquestionable truth at this point. We know what is going on. It's not a conspiracy theory anymore. Remember, 5 years ago we were like, well, it's probably coming from Tether, and it was a conspiracy theory because we couldn't prove it. Okay, CFTC has proven it. We know that this is happening. Okay. There has never been a time that Bitcoin was in a bull market without fraud, right? Because there was the Bitfinex. You know, I mean, there was moves before Mt. Gox, right? But those were all very, very short-lived, and they crashed almost immediately, right? And then we finally had a really long-lived bull trend. There was a little bit of a collapse, and then it went even higher, and that was Mt. Gox. Right. And that whole time period, That only happened because Mt. Gox was literally buying Bitcoin on their exchange with money that didn't exist. It was fraud. Once that fraud was exposed, things fell apart and Bitcoin basically went nowhere for years. And then in 2016, things started picking up again. And you know what happened in 2016? In 2016, Bitfinex had a hack and lost customer funds, and Tether gave them a huge loan of money, and they used that to hide the fact that they had lost everybody's money, right? That was when Tether started printing. And then ever since then, it's been a bull market. And probably, like every time that there's like a little bit of a collapse, it's like the magic money just magically appears out of nowhere and holds price. And everybody says, well, see, you just buy the dip and that shows that Bitcoin is working. But it's not. It's fraud. It's fraud. They're literally printing Tether. They're literally printing Tether to hold price, making money out of thin air. And then you would say, well, yeah, but what about if that's true, then why did the 2017 crash happen? Well, the 2017 crash, they tried to do that and it failed on them hard because of the Mt. Gox whale, the custodian that has all of their money, and he was selling it. They didn't know that at the time. But here's the thing. Now we know what's going on. Start gaming it out in your head, right? Okay. They're going to sell more Mt. Gox. There's like I forget how much Bitcoin. It's a ton. It's a ton. And they're going to be selling it November, December. Okay. And they know it's going to happen. So what is Tether going to do, right? Should they be printing money to try and hold price? No, you're going to lose that battle. They already did that once and they lost, and they know better now, right? So if you're Tether, what are you doing right now? You want to pump price up as high as possible and get as much money out in actual dollars at a dollar exchange as you possibly can before you have to bail. And then after that, who knows what happens? Does the Department of Justice at that point have come out and shut things down? I would hope so. It's long overdue. These regulators, I feel like that some of these regulators are sitting there going like, well, we don't want to be accused of like destroying Bitcoin, yada, yada, yada. They're like dragging their feet. Exit scam. That's exactly what's freaking happening right now, man. Like they have the perfect opportunity with these ETFs to pump it up for the next 30 days and get out. And that's really what this is right now. Like make no mistake, next week or two, almost guarantee that Bitcoin is going to be up. But oh my gosh, you want to get out before that Bitcoin whale or the Mt. Gox whale starts selling. You want to get out. I like the idea of decentralized finance because it helps consumers, but there needs to be something backing up a currency. Well, like here's the thing, Dave, is that like there's going to be central bank digital currencies, and it's going to be awesome because you won't need Wells Fargo anymore, right? Yeah. What is Wells Fargo going to do? What is Wells Fargo going to do when they don't have people putting money in their bank anymore? Like quite frankly, what are banks in general going to do? Because people aren't going to deposit money with them anymore, right? They're going to have to. I mean, people. The thing is that banks have been able to offer people like really crappy returns on their savings because people will deposit money in the banks to use credit cards, right? But if there's a central bank digital currency with a decentralized ledger, then there is no reason for credit cards and there are no reasons for people to put their money in the bank. The only reason you put your money in the bank is so that you can get a return. And guess what? Ain't nobody going to be putting that in there for like a, 0.5%, right? Some of these banks are going to get decimated. Yeah. Today, I am taking delivery of a used RV. Hey, that sounds fun. What was thought was really weird was when the when COVID really hit, there was like a huge spike in RV sales. It's like, what? Apparently that's what happens. Banks will basically be payday loan companies. Oh man, like yeah, it really would be. It really would kind of turn into that. Like really, a bank like Wells Fargo, they rely so much on customer deposits and like fees, right? That whole no reason to use Wells Fargo anymore, right? The only reason you go to Wells Fargo, you need a house loan, you need a car loan, or you want to open a savings account. And who really wants to open a savings account? Like I suppose that I would open a savings account for like if I was going to keep the money for 6 months. But even then it's kind of like, well, go and open up and what is the incentive to get me to convince me to move the money out of my CBDC wallet and move it over to Wells Fargo for 6 months, right? You're gonna have to give me some incentive to do it because like a 1% is not that's not gonna make sense. Ooh, look, I made $1 by putting it over there. It was so hard to find this one. I paid 10 grand more than it's worth because there's nothing on the market except totally trash trailers. Yeah. And stock owners' wallets. Yeah. You like Wells Fargo? No. Yeah, I must be stupid. Listen, I used to bank with Wells Fargo. I mean, I knew that there was all the fees and everything, but I was kind of like, yeah, but I get better service there than the other places, okay? But then there was like, they were literally opening up accounts without the customer's permission. And it was all just this predatory thing to see how many accounts you could open up. I literally cannot believe that Wells Fargo is still in business. I don't know why anybody, if you knew the crazy stuff that they've been involved with, why anybody would trust them right now. Because, like, of course, there's forgiveness and maybe they'll come around and they'll become better in the long run. But it hasn't been long enough, man. Like, I don't know how anybody could trust them. Why don't you buy a nice house in a third world country? That's way better than an RV. Well, he probably wants to buy an RV for the same reason that everybody else has been buying RVs. Anyways, so I'm sitting here thinking about this in the shower. I think about it. Yeah, I'll go through periods, but sometimes I will get hyper focused on the whole tether thing because I just don't think that most people make the connections the way that I do. That to come in and say, okay, first of all, they're lying. Second of all, they're printing money. Third of all, orders have impact. So when they go and they use that money to go and buy Bitcoin, it has a serious impact on the currency. And literally everything that you see whole past 5 years on that chart is all just tether. All you're doing is you're just tracking the movements of money through tether. You're 100% correct. I had a Wells Fargo checking account, and one day I got an email stating that my account was credited $5,000 because they took out a loan for you. Yeah, it's just totally insane, the stuff that they did. There's a Netflix documentary over about it. You can go watch. It's when you look at the, oh man. Because the thing is that the higher ups you say, well, like maybe some individual people did some shady things there. No, it was like a systemic thing at the company. The higher ups came out and they said, we are going to make X loans a day or some, they set this really high bar. And when you actually go and do the math, it was like they needed to open up 3 loans for every customer. Like there was no way that they were ever going to meet these numbers, right? But all of the people in the system, all the chain all the way down. I've had this happen at a company that I worked for. When I was younger, I worked for CompUSA. When companies start doing this sort of thing, just walk, run away, run as quickly as you can, because that is the sign of a company that is either very, very sick or is just, fraudulent, run by people that are literally, how do I put this? Okay, the people at the top, they know that what they're pushing on you is unrealistic, and they're going to hound you so that they can make money at your expense off of your labor. That's really what those come down to. That the company is just really, really sick and they're about to go out of business. In the case of CompUSA, they were about to go out of business because what would happen with them is they would invent all of these services. It's like if you go and buy a wireless router, hey, we'll come out for $500 and set it up for you. Ain't nobody need $500 to set up a wireless router? You kidding me? But you were supposed to sell X number of them a day. There's no way that you were ever going to do it. I don't think I ever had somebody buy one of those. You'd have to be a complete idiot to buy one of those service packs, right? But you had to do it. And if you didn't do it, they would call you. And these were the things that they were doing at Wells Fargo, right? Is if you weren't meeting your quotas, you would get called by the district manager or whatever. And they were being called by their manager, and they were hounding people all the way through to get these loans out when there was literally no way that they would meet it. So let's see here. What's the rest of Greg's story here? Wells Fargo had created a second bank account, added a credit card, and deposited $5,000. Oh boy. What's wrong with bankers being pressured to give out loans? Well, because some people don't need loans, right? It's one thing to be like, yeah, you should, if it's appropriate for a person's financial situation, that they could take out a loan and use that for something, then sure. But coming out and saying we need to have 3 loans per person per day, yeah, it absolutely lowers ethical standards. There's literally no way for you to meet those quotas without lowering your ethical standards. That's really what it comes down to. That's really what it came down to at Wells Fargo, at least. And the people that were higher up in setting these quotas and making these decisions, surely they knew that those numbers were unrealistic, right? I mean, if the employees can go through and do the math and figure it out, surely the higher ups would be doing that. But maybe I'm wrong. Maybe they were really just stupid. Well, yields are coming back quite a bit here. I have to realize that we're recovering a lot of the overnight action. But we could have sold it after that news, and I did have the right direction, right? So on that, I guess the whole point of that is, should I sell it right now? I think I could. No, I don't want to do it after that. Okay, we'll wait. I may just not trade. I'm having fun talking. Oh, man. Pharmaceutical company. Oh, man. A pharmaceutical company, they do a lot of bad things too. But there are also some pressures put on them that aren't really very fair either. So the reality over in that market is that the regulations around the healthcare industry just don't make much sense. They just don't make much sense. Man, this is turning into quite. I'm surprised that they're just careening through there at like 15 half. Really? Because I was saying 651. That was awfully quick. It's just that, what pisses me off it's not even the pharmaceutical company. It's the way that they do insurance. It's like, so the pharmaceutical company will come out and they'll be like, okay, here's this medication that is really critical to your quality of life. Lialda, we're going to charge you $2,000 for a 3-month supply. Okay. So then you get insurance, and the insurance is supposed to pay for the expensive medications, right? Except for that, then the medications get so expensive that they decide, well, we're not actually going to pay for your medications until you've met your deductible. Okay. So like they treat your deductible as like this, like, okay, in the event that something really bad happens, it has to be this amount of money first, and then we'll start paying for it. Right. And, but you shouldn't hit the deductible. Best case scenario, you don't spend any money. Okay. Except for that, you have to spend your money on your medications. So you're guaranteed to hit your deductible anyways. Right. So now what you got to do, you want to pay for the plan with the lowest deductible possible so that you hit that as quickly as possible so that you get the benefit. And that saves you the most money, but it makes the insurance company more money too. It's just exacerbating. And then I'm told that some people that are on the generic of this medication that they can't even get it right now because there's a shortage. And for me, I've been 2 days without it. I'm starting to feel the energy. Like I decided not to work out. I just played Metroid yesterday. And by the end of that, I was starting to feel a little woozy though. Didn't feel super great. And, but it's not that bad. Some of these people, it's like debilitating. Like if they literally cannot function without this medication. And here they're getting nickeled and dimed by every person along the way, right? And like Congress does nothing. Like Donald Trump went and signed something so that these medications would be cheaper. And it did. It made it cheaper for me. I saved money. And then Joe Biden came and rescinded it. Freaking good grief. You seem fine, more sociable. Well, I'm not really more sociable. I'm venting. I'm venting. I think that you should be able to see it in my face at this point. I know it sounds dumb. It's not so bad. It's not so bad right now. You'll see tomorrow. You'll see it. Like you look sickly. I don't know. I don't know what it is, the signs that you look for, but my gut doctor says that he can tell just by visiting what condition you're in. But we're talking about a disease that some people literally cut out their large intestines because they can't deal with it anymore. Hopefully I never get to that point. When I have the medication, no big deal. I don't think I have as much energy as I should. I have a really, between that and being on the Adderall is just really hard to build muscle and get stronger doing my weightlifting. Like as soon as I started doing ADHD medications and waking up early for training, I stopped making gains in my weightlifting, which sucks, but is what it is. For some people, I was just absolutely terrible. How was your diet? Well, so this is something that gets really interesting. So, well, not interesting, but the diet, you really get put in a tough spot because you would think that maybe it's, well, okay, let me segue to something slightly different first for a second. We don't know what causes it. It's an autoimmune disorder. Your body just all of a sudden decides that it wants to attack your gut. Like that to me doesn't make sense. But that's the way that the industry treats it. It's like, well, we don't know, and maybe your body has just developed doesn't like your gut anymore, and it's always going to be like that. I say no. I say that there's something in your gut and it's attacking. Maybe it's a virus. Sorry, maybe it's some sort of bad bacteria that we just can't detect. That's a big possibility. Maybe it's some chemical Like there's some people speculating that people are allergic to the pesticides that we use on our vegetables. And the evidence that they point to for that is that they aren't allowed to use those pesticides in the European Union, and people don't have these problems in the European Union. Okay. I would not doubt that at some point in the future, they will find out that my condition is due to some chemical that is in like every food that we're eating, and that my body just has a stronger reaction to it than most people. And that's what it is that makes me sick. And I'll be able to sue that company for all of the money that I ever had to spend on this condition, and I won't get paid a cent because they'll go bankrupt. Wouldn't doubt for a moment that that's what's going to happen. Okay. Autoimmune means they sort of don't completely understand. Yeah, anyways, so when you come back to what do you actually do for that diet? Well, the issue is that you would want to keep a good gut health, right? That's kind of the thing that I always look at is what can I do to make my gut bacteria more healthy? And a main thing that you want to do is eat a lot of fiber, right? Well, fiber irritates the lining of your large intestine. I mean, for me, when you already have an infection and then you've got lettuce going through there, does not feel good. It does not feel good. So then what you end up doing is you end up eating a lot of like soft food, soft food, easy carbs so that your body can digest it and there's not as much going through your actual large intestine, which isn't particularly good for your gut health. But everybody always says, well, you do this thing. Come on, man. I mean, I literally, if I don't take the medication, I literally bleed. There's literally like blood. I know this is getting really gross, isn't it? I don't need to go that deep into it, but it gets bad, right? So believe me, I've tried every possible thing that you can possibly think of, cutting it out of my diet, everything that you can possibly think of, adding into my diet. Nothing really seems to make a difference. If I take a probiotic, it will reduce symptoms and improve things for about 3 days, but then after that, it loses its potency. You need egg yolks? Well, I eat eggs every day. I eat eggs almost every day from my chickens because I have to, because otherwise the eggs would go bad. Food's getting broke down in your gut causes gas, for Pete's sake. I don't know what it is with the condition that I have that causes it, but you get a lot of gas. Yeah. It's really bad. I mean, it's like you will get your whole large intestine. It's like practically your whole large intestine is just gas. Sometimes that's happened. Have you? I don't think I have it in there yet, but I ordered it and I don't think I will get my stuff until the 26th. When is that? What day of the week is that? Well, how come it won't let me see my... Okay. Next Tuesday. So I have to make it till next Tuesday. I haven't really experienced too many symptoms from it yet, but I know that like tomorrow is when it's gonna start to get. Well, I've tried eating all kinds of foods, and it doesn't change the amount of gas that I get. The worst, I think part of it is that I think that what really happens is that your body will just get rid of everything that's in your large intestines, right? And then there's nothing but air in there. And so what I'm getting isn't really necessarily gas so much as it is air. So it's if I don't eat, don't eat on time, or I don't eat enough, then there's not as much food there in that area. And when the food comes into it, it hurts. Especially when it's going around the 2 turns. You have not answered the question. Have you got blood in my at this moment? I don't. When I do get blood in my stool, it's not bright red blood. It's more maroon. So what will happen is, in the large intestines, I will develop an ulcer, and then that will start bleeding, and you'll start to see it. So everything turns maroon. I have not done that. I'm not doing that at the moment, but probably by Tuesday, I think that we will be getting that. Probably we will. So, like, the reason why I'm thinking about it is like just remember what got us on this kick. I didn't sleep very well last night, and I know that this is a problem that, even though I don't feel it super strongly right now, I know that it's probably enough that it is affecting me, even though I don't realize it. So that's why, like, I'm being really hyper risk adverse. And in this situation, I'm really glad that I didn't take a trade, because did you see how they went almost all the way back up to the high and then came all the way back down very quickly? So they're doing this kind of stuff again today. I don't know if I want to participate in that. That's not happening for any reason from what I can tell. That looks like market maker just screwing with you. Now in the S&P 500, maybe we would have an opportunity if we want to buy. Well, okay, so Ace is going long 18. So here's the problem that I have with the E-mini today. That bond auction yesterday affected the market. There was the bond auction, and then I think one of the sitting Federal Reserve members said something about, if inflation is this much by the spring, we might have to raise rates faster. We might have to do something about it. I think it was kind of that combination of those two things that kind of hurt equities yesterday. I think that equities yesterday kind of got a little bit of a wake-up call. I think that action yesterday might have changed some people's minds, and they're sitting there thinking things aren't all hunky-dory. There's like some real problems now that affect stocks specifically. So it might be choppier over there. I don't think that I can do the trade that I normally do here, where I just say, I'm just going to go long. I bet Ace, based on the trend right now, Ace could probably get 20. Now let's clear it up, because I don't think that, we definitely didn't actually get it. So I'll erase that so that we can see if he's gotten filled. I have the same problems. I don't eat carbs, I eat proteins and vegetables with legumes. I've been talking like seed oil for the last year, and I have tremendous improvements. I would need to. So another issue is that if I was going to go into like a no carb diet, I need carbs for my workouts, right? I use a lot of energy. I have to when I'm really, really working out hard, I'm in like the 3,000 calories a day range, right? So I don't know where I would get the calories from. A lot of fat, I guess. So when we get the price moving, slipping around on the treasuries like this, sometimes you might think, well, okay, there's just a liquidity hole here. I really don't think that the action that we got here really would justify a liquidity hole, though, right? This is just poor action for informed trading, isn't it? Like, even if we had done the informed trading and we had taken along, I would hope that we would have gotten out, rather than having to deal with this junk. You know what, though? It's kind of starting to do the stuff at 12. It's kind of starting to do what it did yesterday. Because remember yesterday, it was like it was sitting there and it seemed like it was going to go. It seems like it was going to go. And then it never did. But then after we left, it went. That sort of a thing. Well, let's try and stay a little bit focused here. Looking for buy programs and if FGBL, if there will be some bad numbers US existing home sales. Well, okay, so let's do come and look here. I don't have my news window open. I closed it yesterday so that I could open it today, because sometimes it won't latch for some reason. I have a little utility that will latch my windows onto each other, and for some reason when I restart Jigsaw, that window doesn't do it. Okay, so we have Fed Waller speaking right now, and we have existing home sales at 10 o'clock Eastern time. We also have European consumer confidence and CB leading index at 10:30. We have, well, we will still be here. We have New York Fed Treasury purchases 10 to 22.5 years. And then there are 4 and 8 week bill auctions later in the day. So since we do have some significant, I mean, that Treasury purchases is a really big deal for the Treasury market, right? Ace decides to take the point. Okay. It feels to me, Ace, am I wrong that when you take the profit early, that it's a timing thing? It's like if you've been in it for 5 minutes and you didn't get your 2 points, then you exit. It seems like it's more timing than anything, but he says, yep. Because when I was going through, remember this spreadsheet, right? The whole thing in the spreadsheet was that you've got to avoid the full stop out. So that means that you want to get that first target as quickly as possible. The longer that you go without getting that first target, the higher your chances are of getting that full stop out. So it makes sense to get like 5 minutes, get out. ZN looks good. They got a good 3 ticks up since we last mentioned it. Oh, it did give it to us. Yeah, it did. Oh, it's funny how quickly it came up there, didn't it? Yeah, it would have been fine. But that's fine. I mean, the kind of the whole thing here is that, I don't know, it seems like a knock on Ace, but it's really not. I think that what Ace is doing is successful noise trading. That's what it looks like to me. Successful noise trading. And I don't know. Like, one of the things that I find really curious is that when I was trading it, there were time periods where I got absolutely decimated. It was like, I just did so terrible. And Ace wasn't here. It was like, did he know that the conditions were as such that it wasn't worth him trading? Or was he just lucky that he happened to not trade that day? You know what I mean? Because I think that's what it comes down to is if you have your targets set up in a way that you can get those filled easily, that allows you to take the risk on without like really exposing like a really fat tail. You get a fat tail that's manageable. And then when is it manageable? You just have to know the situation when it's not going to work. Either the index is really, really crazy choppy or, when it's really crazy choppy. So basically you want to avoid trying to trade in any kind of like really bad market fall, right? Hopefully you were short before that and you caught the runner. And if you didn't, then you just don't even want to touch it. You don't even want to touch it. Oh, man. So I have this video that I've been working on that I wanted to put out on Monday, right? That was about if trading is for you. Apparently, Future Trader 71 and Anthony Credelli are doing a webinar today about the common traits of successful traders. And I'm like, oh, I hope that it's not too similar from the video that I wanted to put out. Because I'm going to try and record it tonight. But I might start the order flow ones this weekend because my wife got a message from her work that she was exposed to somebody with COVID. So they might not let her work this weekend. That would give me more time to record something more complicated. Ooh, my Biden left a four-part tweet. Oh, he's telling people in Maryland how much money he's going to give them in the stimulus bill. If you see me around town today, you can always call me Joe. Oh, wow. Yeah, can you believe it? A 4-part tweet from Sleepy Joe? There's no way he wrote that, but... I feel like in the Treasury right now, I can potentially see it both ways. I think I would still be biased to Treasuries selling and rates rising. But, I mean, they got back up there to that 15 really easily before, and they could totally just slip up there again if they wanted to. The Babylon Bee tweets, AIDS forced to cut Mitch McConnell out of 6-pack of plastic rings again? What? Now let's wait. Let's let the E-mini start, and we'll take stock of that, and maybe we'll try one of our trades over here. Fed's Waller, there are no signs of a credit-fueled bubble. Okay. I am seeing some people on Twitter talking about Fed's Waller's comments, but I don't know if it's a big deal. Oh my gosh, I totally forgot about this. Oh boy. Okay, so yesterday, was it yesterday? Mr. Scott Adams, renowned creator of Dilbert, made a tweet. Actually, you know what? Let me go and find it. Let me go find it. Let me go read his exact tweet. Where was it? Maybe I have to go to his page and I'll find it. Man, he tweets a lot. Is that the problem? Is that I just don't tweet enough? I need to be tweeting 24/7 whenever I just have a thought. Oh, okay. Here it is. So Scott Adams tweeted, "One of our biggest problems is our supply chain and trucking issues. No one seems to know why, or at least their explanations are not convincing why. Feels like some big, ugly secret is coming our way." And then I said, basically, I don't want to go and find my tweet, but I basically said, well, people are buying more stuff and that's putting strain on the supply chain. Why is that not a convincing explanation? Like, and it's so frustrating to me because I don't make this stuff up. It's really frustrating to me when people just kind of assume that I'm just making shit up like everybody else does. Like, no, there's like actual numbers. Well, I'm not arguing with him. What happened was I posted that and all of his followers came after me. I think that if I was able to get on like his Periscope and he had a conversation with me, I would be able to explain what's going on fairly well and that he would be reasonable about it. But a lot of his followers are not at all. And it was just so startling to me, like trying to argue with them, because they would say, like, look, we're buying more stuff. Like, just go and look at the trade balance, right? Let's do that. Let's do that. So if we come, I have to look at it over the whole month. Right? Look at the trade balance. Look at how much larger the trade balance has gotten since the pandemic, right? You can see that it got a little bit better there at the 2020, and then it skyrocketed higher, right? Before we were like 45, and now we're like 75 billion. 75 billion deficit, right? People aren't going out to eat. They aren't going out at all. And so what they're doing is they're redirecting that money into buying stuff on Amazon. That's literally what's happening. And they don't believe me. They don't believe that. So no, people aren't buying more stuff. Well, yes, they are. You can go and look at every economic report that there is about this sort of stuff, and you can see that more goods are being imported. There's about 20% more stuff trying to come through the ports right now than there normally is. Now, some of that is delayed demand, right? Some of that is demand that would have happened in 2020 and it got pushed back to now. And so now that the supply disruptions that they're making this stuff, now they're trying to bring it in, and it's all this stuff is trying to come in at the same time and it can't come in. But also appears that a lot of it is just that people are just importing more stuff in general. And when that happens, that causes all sorts of strains on the system, right? Because the system can't handle that increase in volume, it makes the system less efficient. It's like, okay, so everybody's overworked because of the supply chain disruption. So then people quit. So then you don't have as many people to work. So it just makes things even worse, right? That's what's happening. And they're all like, "Oh no, that's a Democrat lie. You've taken." I mean, like, come on. Oh man, now I do have to go and find the. Now I do have to go and find the tweet because the response, some of the responses when you get into it. Okay, here it is. Here's my tweet. Okay. Market knows what's going on. People are buying more stuff. Why is that not convincing? Yeah, okay. They're not buying more than in 2019. Yes, they are. 20% more. This is BS. Okay, this one was actually like, I don't even know. What does this have anything to do with my response? It got a lot of likes. Okay, whatever. Buying more stuff doesn't dictate as to why there are not enough truckers, longshoremen. Okay, so I think I responded to this guy, right? Sure it does. All that demand being put on the supply chain makes it less efficient and leads to congestion problems at every step of the problem. Right? There you go. There's somebody that actually said stuff. Oh, let's read these. Consumer spending is at an all-time high with none other than stimulus checks, right? Unemployment or on disability, not to mention small businesses that have long since closed up shop, and some of those containers that still haven't been brought to their end destination and have been sitting for the last 6 months or so with small business product is no longer needed because they've gone out of business. So the cans just sit there because they're unclaimed. Tell that. Okay. They need Walmart, Amazon, Target, Walmart to come get their stuff. We tried being open 24 hours and no one shows up. Yeah, I mean, these are all the problems. I'm sure that they're moving record amounts of cargo. After we get it off the ship, it's customers' responsibility to deal with the cargo, and they're not doing it. Yeah. Listen, it's creates inefficiency at every step. Okay. I see you had some Kool-Aid. That's not the reason. Experts have been talking about this for a year. No, it's due to several policies and laws and regulations on trucking in the state of California. Like, I'm sure that there are some laws in California that aren't helping, but even in the best of circumstances, this is good. It's going to constrain the supply chain. The stress makes the supply chain less efficient. I actually think there's some back and forth on this one too, right? This guy was like, is this a joke? Like, does basic economics it doesn't make sense to people? Like, and here's the thing that's so funny is that they're all live in this bizarro world where everything that bad is happening is Joe Biden's fault. And if I say that the reason we're having supply chain problems is because more stuff is coming through, that's what Jen Psaki said. And so that must obviously be wrong because we're trying to hide how Joe Biden is complicit in everything bad that's going on. Well, like, the funny thing is that really what I'm saying, it's not really Joe Biden's fault so much as it is Democrats' fault, right? What happened was when we did the stimulus bills back when Donald Trump was still president, because the Democrats had a majority in Congress, not in the Senate, but in the House, they basically wrote the bills, and the way that they wrote the bills was it was all demand side stimulus, and they didn't give the supply side anything. And so the supply side wasn't able to build up and improve their supply chain so that they could handle all of this crazy amount of demand that's now coming through the system, right? So it's like the best possible use case that you could ever come up with in favor of supply side economics, because this is exactly why supply side economics was created and what they were saying back in the 70s and why it ended up being so effective. As they said, if you only stimulate the demand side of the equation, you don't actually get the benefit out of it in the terms of like higher GDP and sustained growth because the supply chain can't keep up. So you have to put stimulus into the supply chain, and it's actually really beneficial to put it in the supply chain because stimulus in the supply chain creates its own demand in a way because of the workers getting paid and everything else like that. So I would argue you need to have demand side and supply side stimulus. So really, it's like the most devastating argument that you could make against the Democrats' economic policies, and they're all convinced that I'm trying to run a shield for the president. Isn't it absolutely ridiculous? I tell you what, the people on Twitter, this not happen anywhere else. I mean, I have really frustrating conversations with people on Reddit, for instance, but Twitter is just like crazy. What people post and how they respond to things. Let's see here. So the trade deficit didn't improve under Trump? No, not really. So the thing is that the intention was to improve it. And I think that if Donald Trump, if his policies had been allowed to go all the way through, then maybe that would have happened. So like, that's the thing you got to understand with what Donald Trump was doing was like, it was kind of like a high risk strategy to balance the trade. But what happened was during that time, because of the tariffs and everything else going through, it actually increased the trade deficit during that time. And then he didn't get to finish it, right? They said, well, this is hurting the economy and that will hurt my chances of reelection. So I'm going to back off. And then after I'm elected, then we'll bring it up again and we'll force them to negotiate and whatnot, right? And then he lost. So we never really get to see the full fruition of Donald Trump's policies, and Joe Biden hasn't done anything about it. Like the stuff that's been in effect just stayed in. They haven't touched it. But the pandemic increased the deficit substantially. So it's kind of funny because I remember arguing with people at the beginning of the pandemic because everybody was saying, "Oh, this is a weapon by China." Well, I think that the lab leak theory is compelling, but that doesn't mean that the Chinese intentionally released a weaponized virus on the world. And I was saying, it doesn't make sense. Why would they release a virus on themselves to try and win the trade war? Because that's what people were kind of trying to say. Well, it's kind of funny because in the end, the United States ended up suffering from the virus way more than China, at least so far. But, China hasn't had it completely go through them. I'm sure that they're going to get some damage from it at some point too. But then the net result was the lockdowns, which was not something that I ever anticipated back then. And what was the result of the lockdowns? People buy more things. Increase the trade deficit. It sounds like you guys are still talking longs. Yes, maybe came back a little bit there. About to open here in 20 seconds. My feed okay? Okay, yeah, the treasuries have just gone really dead here. That's all. So they seem pretty heavy here at 12.5. We should probably wait. Maybe at 8 o'clock they'll do something. So a little bit of absorption there. That's actually a really tight open. I haven't seen opens like that in a long time. Again, we have longer term bonds higher than shorter term ones. Oh yeah, the curve flattened out. I mean, yesterday the curve steepened a lot, but it's already flattened back out. Actually, let's come back and check. We're about where we were in the end. The 30-year is the 30 and 10 is still steeper than it was like 2 days ago, so by a considerable amount. So I can see some selling coming through and buyers just trying to hold it. So okay, that was some interesting order flow there. Didn't get the best entry. Well, let's just let it lay out for the purposes of statistics. Treasury a little bit higher there. Kind of seems to me like they're going to want to come all the way back up to this 15, but I could be wrong. Like, I don't know if there's a fundamental reason for them to move from where they are right now. The market maker could just make it do whatever he wants. Man, it looks like I'm going to get stopped out, huh? Yep. Here, let's get rid of that other one. Oops. Flat. Okay. That's probably a little late on that. And now Treasury's at 14. Okay, so that's what I like to see is orders come in after me. I would like those orders to have filled me, though. Let's see here. What are the orders doing? Stack, bid pull, offer stack at 25.50. Okay. Oh, it's so close. Oh, I don't know what it is. Oh, so I was talking to Salim the other day about comparing the data feeds. And I'm not sure if you understood what I was saying, so I'll show you right here, Salim. So like if I come to a reconstructed tape, I'll just open up one with the ES on it. Where is it? Where are you? Yes. Okay, did get one fill. Okay. So here's your reconstructed tape. I think that they have this turned off by default, but if you come into display, you can show time. Cool, right? So what you could do, and it shows it to the millisecond. Oh, is it only to the millisecond though? I wonder if that would be nice if you could get it to microseconds. Let's see here, display, time, press up, sweep colors. And I don't think that you actually can. Maybe we should ask Jigsaw to change it. Anyways, you would be able to see if you had, both data feeds going at the same time, you could compare the timestamps on the orders and see if they're different. But probably if we were going to do a real study, we would want to do it in NinjaTrader, because then what we could do is we could write an indicator that does it, when watches the orders and matches them up and calculates the difference between them on average, and do a real empirical study on the differences between them. That's why to really say that one is really significantly better than the other. Well, we almost got our second target. Treasuries coming back there a little bit again. And the ES really, really chopping along there. Seems like at the moment that buyers might have a little bit of an edge, but the deltas are pretty flat. It's pretty even. So I'm wondering if this is a situation where I should have gone out. Well, I can let it go to stop out, but maybe that's a situation where I said it's been too long, I'll scratch it. Comes back up super easily. Man, you can't really see it on the chart, but the treasury ticked down 3 ticks there pretty quickly too. The fact that it's struggling here still does kind of make me suspect that we could get some downside. Something kind of off about the level 2 in the 10-year here. Is it just that really big order at 08? Still being kind of wishy-washy in the ES, isn't it? That looks like the treasuries are favoring rising rates at the moment. The 30-year kind of turned down a little bit lower. Oh, look at that. Look at that. Now, I'm going to be too late for anything, but... They did not like that in the E-mini, did they? That would have been a nice spot to catch in the 10-year, but too late. There is a really big order. Is that? Is there a large MBO order there at 21.5? Because that one really sticks out. It's like three times the normal amount that you'd see out there in the 5-year. Well, even though the Treasury kind of had that aggressive move there for a moment, it looks like they got sucked back up into the hole. Look at that. Yes, it looks like buyers are trying to make a rally. What is that, Octavius? Bad entry at 1875 yen. Well, my trade is not really a very great entry, right? I should be out of it by now. I suppose that I didn't stop out means that it's a good entry, but I would rather be out of it. That's MBO 15s, yeah, but it's not 3,800 trillion. Oh, those are commas are the different orders. So there's a 3,800. There's an order of 3,800 there at that spot. Okay, and then the rest are just normals. Very curious. That's a pretty big order, huh? And it's not at some round number or place that you would expect it to see or something like that. So they tick back up. They're going to tick all the way back up to 13.5, are they? Yep. They're fighting it a little bit there, though. So I kind of want to watch the market makers here in this situation and see what the market makers are thinking. Are they willing to take the fills there? Seems like maybe they are. The inside here in the 5 years a little light. Kind of makes me think that there could be another tick or two up. Looks longish. Well, we're probably still in his. I think the fundamentals and the trend suggest down, but the market conditions have been as such that yeah, we could go up to 15 very easily. That's why I'm kind of watching the market maker to see. I mean, I really need to see a stack here at 13, but like, do they take the fill? Like what would be interesting to see is if this stacks to 2,000 and then somebody buys all 3,000 up at 13.5 or not, or do these pull, right? Because in this situation, given where the 6J is and everything else, I think that there might be more market makers willing to take fills there than normal. Okay, so let's see, they hit it with 1,500. And it stacked back up. Okay, so this is trying along now. Hmm. 5-year kind of stacked up. 30-year ticked down. 5-year hasn't really done anything yet. Hmm. Okay, so see, even though it pulls that they're icing at 13.5. So it looks like there's a lean going on here. The E-mini is coming close to the regular session high. Awfully close. The volume is coming through long. Okay, 13 goes offer and stacks and 12 half pulls. And note that those guys at 12.5, yeah, they're not willing to take the fills, are they? Only 768 to push it. And even when like one order would go through, they would pull. Now, the 30-year is leading the way. We want to see that the 5-year also be doing stuff because, again, there's that big order at 12.5 that we're interested in. Okay, so that time they took some fills, but the selling was very aggressive too. What was the, I missed it. I wonder if the 30-year was offered at 27 there when that happened. Oh yeah, we're going to be getting some numbers here soon, aren't we? Home sales, looking for a reading of 609 million. Those numbers we're not expecting to be super great, right? Well, I don't know. Maybe the market is expecting them to be good because they still look awfully bearish. Their E-mini did take a step higher finally. I can move my stop there. Look at ES go. It's looking pretty good now, isn't it? Looks like you all caught that runner. I see like 3 of you guys all saying you went long. Ace did, YouTube, Finance did, AO did, and I've just been in this whole time. That kind of makes me a little bit nervous. Oh, we still got 8 minutes to the news here. Okay, so here in the Treasury, it still appears to be bearish, but they're leaning at 13.5 and like 11.5. So as of yet, no sign that we're going to be able to break out of the range. You can see when it down ticks, they're much stronger ticks. Look at that. They did 2 ticks in a row there. Saw that down tick and then I heard something over the squawk. I got a little excited, but it wasn't. I don't think that down tick was in relation to that news. It was just Feds Waller talking about central bank digital currencies and the Chinese, the one that the Chinese have. $30.28. So now I need to come in here, see where are we looking at? Is there anything above us in the ES that I need to be concerned about? Well, upside targets are going to be like 45, 45. So there's plenty of room on that. But volume profile wise, there might be more interesting stuff. Okay, so we're already to yesterday's point of control, 31. Yeah, okay, so I should leave that, essentially. I was thinking, should I try and extend my target and unless the news is like really good or something, I should leave it. Oh, okay, that big down move in the treasury happened before the open. I was like, shouldn't the low be like 090? 5 points is an ace straight. I think mine looks for 10, so. Jeez, oh geez. Strong down tick at 10.5. They didn't take it, but still. Especially with the E-mini rising here and everything. Of course, there is going to be a little bit of resistance here in the 26, 27 area because that's where they fizzled out in the overnight session. And the interest rates are rising pretty aggressively right now. Still see that huge old order in the 5-year. Waller, the current size of the balance sheet has caused no problems for financial market or the macro economy. Okay. I'm going to reset it again right here. So I can kind of see if it backs up. I want to see if the 5-year or the 30-year is backing up more. Trump gets a social media platform? Wait, what? Launches Social Truth. Trump Media and Technology Group and Digital World Acquisition Corp have entered into a definitive merger agreement, providing for a business combination that will result in Trump Media and Technology Group becoming a publicly listed company subject to regulatory and stockholder approval. Blah, 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 blah. Their mission is to create a rival to the liberal media consortium and to fight back against big tech companies. They will soon be launching a social network named Truth Social. Truth Social is now available for pre-order in the App Store. It will launch its beta launch for invited guests in November 2021. Sign up at truthsocial.com. Truthsocial.com. Okay, they took the tick. I'm going to sign up. Cool. So just an announcement. We don't have an actual website yet. It's going to be interesting. Yeah, it's going to be interesting. Okay, so the Treasury did take the tick down at 10. Realize that in the overnight, just before the regular session started here in the Treasuries, they were a little bit lower. The lowest that the 10-year ticked was 8.5. Okay. And the 30-year is a lot higher than it was from that. So that means that there could still be some pulling down in here. That's also why there wasn't like some crazy stop run there at 10. Jeez. So remember, the existing home sales numbers expectation is 6.09. Okay. Okay, so 6.29 versus the forecast 6.1. So higher than forecast. Not significantly so, but it doesn't contradict this increase in rates, so we're good on that front. Okay. Okay. I'm out because I'm seeing them fishing around here. I think that the Treasury might push down a little bit more. I might have been able to get 20. But that is just making me nervous. I would think I was a little bit too trigger happy on that one, actually, because that 5 years still want to tag 21.5, right? Okay, so what price did I get? 7.4. Okay, so that's okay so far. But if we got 1, 2, 3, 4, 5, if we had gotten 7.9, 7.8, that would have been better. See, I think that some of what I was seeing there was just spreads. That's why I'm being a little bit like, maybe I could have been more patient. Like, maybe I could be sitting here looking at it now and being like, okay, like, actually, yeah, let's get 7.4. But hey, Pop, how are you? Here every day says hi. We appreciate you. Well, and thank you for subscribing to the channel as well. Okay, so the 5 year is being a little bit shy about the big order. Okay, they took it. Oh. Well, did not. It only resulted in two ticks in the 10-year. In the 10-year yield, that is. Well, when you go through an order like that, that's a really bearish sign. But because it's so much volume, it also very often tends to create a hole, right? So yeah, you can already see them trading into 21.5. So to reiterate, for those of you that aren't here every day, don't know what I'm talking about, when we're watching the order flow, we're looking at the different forces to try and understand what's going on. So there are three major forces they were looking at. One is going to be the market orders, the buying and selling. Another one is going to be the limit orders. And then the third force is going to be the limit orders pulling, right? So for instance, when we were at the top and we picked the area that we got into, the reason that we picked that area was because I could see that the market makers were kind of pulling all in this area, but we're holding in this area. So I knew that the fundamentals kind of suggested lower. So when I saw that the market makers were more willing to take prices at that spot, I decided that that was a better place to take a trade, right? When we came down, I can see this huge order at 21.5. So when they come to it and there's a really big trade there, right? Those guys, they didn't pull out of the way. So that's the first thing. But the second thing is that because so many orders went through there, that really damages the liquidity. Think about it. Think about if we were going to have a Walrasian auction, which would be like all of us together. You have to in the next 60 seconds, you all have to give me your orders. You pick a price that you're going to buy and sell at, right? And then after that minute comes, then all of your orders get matched up, right? So say I'm gonna draw this out because I don't want to take another trade, and this is a good time to talk about this. Okay. So we're gonna come in, and you guys are gonna all put your orders in, right? And so what will happen is, let's say that half of you want to buy and half of you want to sell, right? Some of you will want to buy like this. This is going to be the people that want to buy, and then this right here will be the people that want to sell, right? And the people here in the middle, this area right here, are the people that get filled, right? Everybody else, there's not somebody to match them in. So they're still going to want to trade. But everybody that wanted to trade in through here, they got filled. Okay? So what just happened there was that instead of looking like that, it looks like this. There was a lot of people that wanted to trade there, and there was a lot of people that wanted to trade there, right? So now that all of those guys are out, right? If we go a little bit higher, guess what? There's going to be more people that want to sell. And if we go a little bit lower, guess what? There's going to be more people that want to buy. And if we get in the middle, there's not going to be either, because the people that wanted to trade that location, they already did it. They got filled, and there was a lot of them, right? It was a big order. So what does that do? It creates this sort of a thing. We get stuck. 21.5, that is a hole. So since we were already short, it was already long down here, right? That's a good spot to get out, because it takes time for that to fill back up, right? Like those guys got filled. In order for there to be more people willing to trade at that location, we need time to pass. And it turns out that the amount of time that takes is about 45 to 90 minutes. So what we should do is we should just, we're probably going to range here in this area for the next 45 to 90 minutes. So maybe, actually that might not leave us with another trade today, but there's a good chance that later in the day at 11:30 Eastern time, so here in 45 minutes or 45 to 90 minutes from now, maybe they could make another push, right? But for them to make another push, they would need to let the liquidity stabilize. And the other issue is like, if you're somebody that really wants to sell, right? You don't want to be selling it right now, because if you sell it, you're going to have more impact. Like you're going to move it and you move it down, like, let's say you sold 8.5, 8, 7.5, 7, you spent all this money to sell it down here because you're trying to create momentum. Guess what's going to happen? It's going to snap right back up there, right? It's going to go right back to the hole. So it makes no sense for the seller to try and sell here. Instead, what he wants to do is he wants to let it recover so that he has more buy side liquidity to sell into, so that he doesn't have an outsized impact, right? And that's why that dynamic happens. And I just explained to you something that not very many people know, and it's very empirical. There's studies about it. You can read about Walrasian auctions, and it is probably the strongest edge I know of, I think. Like, because it's not necessarily a signal like it happens in, oh, you want to take a trade, but it helps you understand the market so much, right? Helps you see, okay, this is a good spot to get out. Helps you understand why it does what it does. It helps you understand why, like, getting into a trade right here maybe not a very good idea, right? And it also kind of, once you see where those spots are, you can kind of also get a better idea of where the meta orders are, so that you kind of know when to get in and when not to. Like when I got in to the trade originally. But hey, $15, that's not bad. In fact, I think that puts us up on the week. Should we go look? Let's go look. When I get a good trade and I'm really happy, I feel like I give too much up. But you guys, you got one this time. Like, should I not share that? Actually, it's okay for me to share that one, because even though I think it provides some edge, it's like telling you about it isn't going to make it go away. That's the thing that's so cool about it. It's a structural inefficiency. Okay. So let's just look at the last 2 weeks. Okay, yeah. No, that's good. Really good. So that does put us up on the week. So we had, 2 days there, tiny little losses, and then a good winner. Good. I mean, God, sure, it's only $25, but hey, I take it. And hey, 50% win rate is good. Anything above 45% is good. Actually, 67% on the short side. Clearly, there was some longs that I took that I shouldn't have, huh? And there was definitely, I could have made some more. MAE and MFE isn't that too bad either. I really want that MFE to be more, like, I want that to be above 10. Like I think in an ideal world, this would be 20 and MAE would be below 10. But, you do what you can. Average hold time 30 minutes. That's fine. It's not factoring in fees, so I didn't, and probably actually only made like $20, but cool. Well, that means that tomorrow on Friday we can we can tilt and lose it all, right? This is what I would normally do. I don't know. Well, let's see here. Do we have any significant financial numbers tomorrow? You know what the best part of this is that now that I focused for a little bit and caught a really good trade, now I can turn around and I can start ranting about things that bother me again, huh? Wouldn't that be fun? Okay, tomorrow, flash manufacturing, PMI, that is something that matters. We also got FOMC member Daly and Fed Chair Powell. Okay, that one's marked as red. What is it? Due to participate in a virtual panel discussion about post-COVID monetary and financial stability challenges at the South African Reserve Bank. Okie dokie. There you go. Bup says. Okay. That's going to be after I stream, so I'm probably not going to take a trade based off of that. I don't know, like manufacturing PMI is, I think, an important number in the current circumstances. It's kind of more of a light impact event though, usually. So I do think that tomorrow I kind of need to be cautious. I mean, probably like today, like probably it's going to be similar to today, where we might be able to pick out a really, really good trade, but that it's going to be difficult. Now, on the E-mini side, things still look bullish, but it's awfully slow. It's awfully slow compared to like what it was yesterday, right? Are you guys still long in here? Or did Ace? Okay, it says I'll take it off and leave a contract on. So I don't know if he's still in or not. It does kind of look like that when the treasuries kind of went crazy, that the S&P 500 kind of backed off too. So YouTube Finance still long. Okay. Yeah. I'm supposed to let this run. So one of the things that's curious about my model is that, like, at this point, like, I just have to decide when to get out, right? I don't think that I'm always going to get that. And am I going to let it come all the way back? That's probably not a good idea. So, right. It's good because, well, it's interesting because basically at this point I make money no matter what. It's just a question of how much do I make? When's the right spot to get out? I'm not convinced that I'm the right spot to get out. I mean, there clearly there is some resistance there at 27, but it doesn't actually look to me like people are like actively going short or anything like that. It looks, when you look at the volume, more like that bulls are just being a little bit shy about that area. So I see no reason why we can't back off a little bit and then push through higher. Okay, now the treasury, the 10-year is down there at the bottom. The 5-year is still kind of stuck at the 21.5. I do think that we will go lower. I just, that situation, it makes sense for me to get out. Now it'd be interesting if, because we did get the hole, right? We did get the hole. There's only, well, okay, there you go. So only 20 minutes and then they went for it again. But there's still a good chance that they get sucked back up into it. So I could have gotten my $20 if I waited. Could have. But I think I still made the right choice. Could you do a tutorial on the Racine edge? Well, so here's the thing is that, like, there's a lot of these things about order flow that I talk about that I can kind of give you a general idea about it. But for you guys to really understand it, I would have to teach you like a semester long university course. You know what I mean? Because there is math behind it, but understanding the math behind it is, I don't even really fully understand the math behind it. It's complicated stuff. I couldn't derive the equations. I think that's one of the next things that I want to do. I have a big long list of stuff, but I want to get into some more statistics and I want to get into some machine learning stuff. But another thing that I want to do is go back through that book and be able to derive all the equations from it. You should become a professor. I know, right? This is so funny because I've always said, like, I have no interest in becoming an educator per se. And when I say that, I'm saying I'm not going to come out and make $1,000 course and sell it online. That just, I have no interest in doing that. The things would have to change significantly for me to do that. It would have to be like there would be a whole support structure around it, because that would be a lot of my own time, to teach a course like that. Now, if a university wanted to hire me to teach a course like that, I would be so down. And we could write books about it. There is a book about it. It's called Financial Markets Under the Microscope by Jean-Philippe Bouchard, and where he does all this. And the college course would basically be, that's the textbook and that's what I would teach. I the most qualified person to teach that? Probably not. Now, I do want to make a book, though. I do want to make a book. I wish I had time to write a book, because I think that I could write a pretty big textbook that, and I mean, it wouldn't be a cheap book. It would be like a $100-$200 book, but I would do a book. I have a question. It's a bit touchy. I'm noticing that we're talking about we're talking about Seth making $15 to $20. Obviously, if you have a higher risk tolerance, you could be risking more margin to be making a lot more than that, right? You could have taken this in the treasury, and if you had taken this in the 10-year, then that probably would have been about $250, right? Actually, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So about $350, right? Look at them come back up. Okay, what was that? Was that news? Well, but that right there again is a really great example of why I chose that spot to get out, even though I could have gotten a few $5 more. I wasn't too worried about that sort of a move because that's what you're gonna get in this area. Because the liquidity is not going to hold in that area. The liquidity is damaged. So yeah, you could be risking $350, which brings me to your question: is it impossible to make $100,000? I'm not going to say that it's impossible, but for us, it's not really a realistic expectation. No. So like, what would be reasonable performance? I mean, I don't know. It can be anything. You know, for me, $25 over a week, 2 weeks, I guess, actually. $25 over 2 weeks. You'd size that up into full mini contracts. I make $250, $350 in 2 weeks. I would be really happy with that. And yeah, you could size up, but you know what? I think that most people, I don't want to make assumptions about how well you're doing, right? Because I know there are some people in this stream that do really, really well. There are some people in this stream that have a lot of money to work with. And there are some people in this stream that are, you know, like me and like to keep it light. I could risk a lot more, but I'm find that I'm way happier and more comfortable just risking a few dollars, you know? And building it up. But I think that the first thing is like pay for your commissions and everything else, right? Like just get it so that at the end of the month, you are making more than your costs. So you've paid for the data fees and for the jigsaw. So that's like $50 for the data, $50 for the jigsaw, and then all of your commissions. And if you do all of that, at the end of the month, your profit is $100. Right? Then you're in it. That should be your first goal, right? Get to that spot first, and then get to a spot where you're making a little bit and build up, you know. So now you've had a month where you made, instead of just breaking even after commissions, you made $50 after commissions. Okay, now add another contract. And you could size up, and it is possible to size up and get relatively big. I mean, there's a limit to how big you can get. But it's totally possible. But only like 5% of traders get to that point, right? So sitting there from the very beginning and saying, okay, like the first thing that I want to do is I want to make a living from this. So I need to make $5,000 a month to be equal to $100,000 a year. And so I've got to trade to catch that. No, that's the wrong way of going about it. You're probably gonna be too aggressive and nervous, and it's gonna harm your development. So that's what I would say about it. Is that fair enough? But get break even first, and then just take what the market gets. And then if you've been trading for a while, you know what your performance is. You really feel like you feel like you're trading really well. You really feel confident. Then you can go back and you can say, okay, well, how much money would I need? How big of an account would I need to have to really make a living from this? And then figure out how you can get it, right? Because at that point, like if you go a year, let's say that you go a year, 2 years even, maybe 2 years would be better. You go 2 years and you have a consistent track record. You're making a little bit of money every month. like you can turn around and show that and get funded with that, right? Now you can be talking about big time money. That's where, like, you know, you could go and trade on Axia's bankroll, right? So that's like 3 times the GDP per capita of India. When you look at the chart and the amount of volume that just traded there in the 5-year, it does very much look like news, but I did not see any breaking news when that hit. Like, the last thing that I had seen was Manchin. There could be some related to Congress. I was telling that. So it could be news. I don't think that I should rule that possibility out, that there was a piece of breaking news there that our news squawk just wasn't talking about per se, and that we're not as aware of. I don't see anything having come out since then that would really indicate to me that that's what's going on. So, but it is entirely possible that it was just natural flow created by the combination of a large buyer wanting to hit in here and a really big liquidity hole around the 21.5 area. And maybe even some people like stopping out, trying to catch, you know, trying to save their profits, that sort of a thing. Two and five both shaking at the 5 time. Okay, so do you see yourself sizing up? Yeah, well, have you noticed that sometimes I do take 2 contracts? If it wasn't such a slow week and I was, you know, like I'm at that trade that I caught, it went way better than I thought it would. You know, like I thought that we would maybe get down to 11. I'd have a hard time getting filled at my 10 ticks, and then it really pushed, and then I was like, oh well, there's this news coming up, but we held through that, and there was no big deal, and we came back. Bitcoin quickly fell to 63,400 and a sharp drop from 65,000. So hold up. Let's make a new chart for this, because I'm just going to keep it up temporarily. Let's do here ZF. 5-year note future 1 minute. We do get the oil. What is it? What is it called? US EIA natural gas change. And that's maybe not a huge deal. Okay, BTC future, also 1 minute. Hmm. Hmm. Okay. So that was where the 5-year like really shot up, right? It's not really related, but Bitcoin did drop after. So that's kind of curious. Let's see here. Is there anywhere else where I can see like a... No, I really can't. I really don't see anything. What about this guy right here? Not even in the dollar. Is anyone still? I'm still long. I'm looking at that and I'm like, I should probably extend my target, right? Like maybe we can get the full VIX target, but I mean it's moving slow. There's no way that we're going to reach that before I quit for the day. So I should probably just take the profit there at that one. Anyways, there's a question. Do you see yourself? Oh yeah. So I do size up. I would like to size up to 3 contracts. But like I kind of took a pretty bad trade a few weeks ago, right? Lost a bit on that bad trade. And it's really hard for me to get 200 a month, right? So or sorry, more than 150. So that's what I would need to want to size up again. So I don't know. But when we get there, then we'll size up to 3, but I'm still going to size it based on the amount of opportunity that I think is out there. So in a situation like today, where I'm not sure that there's a ton of macro news, nor am I 100% sure, even though I might have a bias, I'm not 100% sure on the direction and whatever else, I'm going to size it smaller. And then when I'm feeling really confident and I really know that it's going to go, I'm going to take it bigger. Okay. I spent way too long trying to answer that, but Bob, you deserve it because you subscribe to the channel and you're here every day. And I can tell that you're trying hard. Is it possible to track most of real-time volume like buffer indicate market direction? So I'm not quite sure what you're alluding to there, but just remember when we're talking about the 3 major forces, the market orders, the limit orders, and the limit orders pulling, the market orders are the ones that are the most likely to have informational content behind them, okay? I mean, limit orders can have informational content behind them, especially in the treasuries. They're more likely to have informational content behind them in treasuries than in other instruments. But generally speaking, informed traders prefer to use market orders. So when you're looking at those market orders and that volume cumulative delta, that is a more effective indication of informed trading. And part of it is I think you just kind of want to watch the location and know where are some spots where the market makers would want to trade and not trade, right? So when I get to a spot where I think that the market makers would want to hold and they don't hold it, and then I see really aggressive order flow there too, right? I'm immediately thinking like, they must all know something that I don't, because somebody is very aggressively taking that. So the market orders seem to have some indication of informed trading, and the limit orders are seem to see it too. Like the robot might not know the information, but he knows just like with the amount of volume and everything, he's all of a sudden he's like, well, this actually isn't a good spot to take fills anymore. I mean, you can just keep a constant ratio of margin account size, and as you make more money, you can size up without ever changing your risk profile, but that is just theoretical. Yeah. But especially when we're trading micro contracts, right? That's kind of the issue, is that if it was like, if I was trading ES, right, I would already be up to like 5 contracts. But when the costs is like a third of your monthly profits, sucks, right? But I think that's kind of like the bigger thing I'm trying to get across to people. Maybe I should just be putting it this way, is like, guys, it's okay for it to be a hobby. Like, yeah, you can make a lot of trading, but everybody seems to come into this attitude that like, if I can't make $100,000 from doing this, then it's not worth it. And I just don't feel that way. I think it's fun. I think that you can come in and you can be very risk adverse and make back your costs and just trade for fun. And the market needs people like that, you know? And then you get good, and if maybe you get lucky and then you do make a ton of money, but it's okay if it's just a hobby and you're just covering your commissions. Get to that spot first, and then take inventory of where you want to go with it. YouTube finances, I'm trying. We're all trying, right? But that's point number 2, is that there are really 3 major types of participants, right? There are really 3 major types of participants. There's the market makers, there's the informed traders, and there's the noise traders. And generally speaking, the market makers and the informed participants rely on the noise traders to hide their activities and make money. So that's why noise traders tend to lose money, and most retail traders are essentially trading on noise. They think that they're trading on that they're trading on something that will predict the future, but when you really put a really serious statistical analysis on it, you find that it really doesn't. The market is very statistically efficient. Okay, so you're likely to lose money. And a lot of what some of the best traders that I see, when I really dig into what they're doing is they're playing around with the risk a little bit in order to make noise trading profitable. Like, you can make money from noise trading. It's hard though, right? So really, I think that if you're really going to make serious money on it, probably the more fertile ground is to become the informed trader, to know something about the market at that point that has a high probability of predicting which direction it's going to go, right? And you look at my stats, you know, I'm trading above 50% now. And when my losers are a lot smaller than my winners. And how am I able to do that? Because I know which direction it should be going. So like, if it doesn't go the direction that it should be going immediately, then I know I did something wrong. Like, that probably wasn't, I was probably too deep into a liquidity hole, and so price was moving too easily, or I was just straight up wrong, right? And there's just being an informed trader is such a huge advantage, and a retail trader can get to that point. So if you are trying to make a living from it, that's the direction that I would suggest that you take. Is that the direction that most retail traders take? No. The direction that most retail traders take is that they unwittingly become noise traders. And that means they'll make money for a little while, but then eventually the fat tail comes and they lose. if you do it for fun, you're going to be food for the sharks. Well, we're doing okay so far. But I mean, listen, here's the other thing is like, there's something to be said about taking it seriously. I mean, work hard for sure. And you got to be doing it in here to make money, right? But the reality is that you're probably going to be food for the sharks either way, right? 95% chance you're going to be food for the sharks either way. Yeah, macroeconomic informed trading. That's how I would describe it. Yeah. And it's not like I don't have what we would consider technical edges, right? Like I explained a technical edge to you guys. That's really, really powerful, right? But this is not the basis of my trades. That's a way that I make more efficient entries so that I can trade in a way where I really don't have to let my losers push very much against me, that I can have confidence to get out almost immediately without having to worry about like, oh, and then it's going to go right back down. I'm going to miss it. You notice that doesn't happen to me as much anymore. And why is that? Because I understand the liquidity better and I'm trying to trade off of an informational edge. Do you ever see yourself doing this full time? No, I don't think so. So, like doing this full time to me would be like, I sit here at the desk and trade 8 hours a day. That's never going to happen. Most of the opportunity is basically when we're streaming. So even if I was making enough money from it to make a living off of, I still probably wouldn't, I would probably extend the stream another 30 minutes, maybe another hour, and that would be it, right? And then I would be doing something else, and I would have to have something else to keep myself busy. Now, I do think that I could do the YouTube channel full time. In fact, I think that I have enough vision ideas to have like 3 full-time content creators on a channel making content for this. Which seems like really silly because I don't even put a video out every week, but it's just really hard for me to find the time to record with the baby around. Because the times that I do have to record, my wife is gone, so she can't watch the baby. So maybe someday we'll do the YouTube full time, but even if I was making tons from just the trading, I wouldn't do it full time. I think the way that we're trading, you don't want to trade for too long. Like you really do have to watch the liquidity. I do have to stress, like understanding the liquidity is a really important factor. I think that it's a huge part of the success that we've had past 2 weeks. And so you gotta understand that stuff, and you have to pay attention to the DOM, and that's exhausting. I wouldn't be able to do it if I didn't have you guys here to talk to, because it's like looking over here and talking. That's the thing that allows me to get the chemicals going and that sort of a thing. You'll notice that the times when I've been trading the worst, I get very quiet and overly focused, and that's when I'll start making bad decisions, which is why I've tried to move much more towards like, if I do get a trade where I don't really like it, part of it is because I know how long it takes for the liquidity to recover. I know that like, I probably have some time, right? But then I come over here and I talk, because that kind of helps me get my bearings and get my chemicals and everything else back in gear so that I can start making effective decisions again. I know you've answered this in a way, but I find this idea too perplexing. The market moves 3 to 5 handles every 2 minutes. Is it that hard to find the best locations in trade to make just 4 ticks and do it on 10 ES contracts? It is. So it really is. The market is very statistically efficient. So to have some sort of a pattern or signal that really has a really strong probability of playing out in a certain way, like they just don't exist. Like if you can go and you can get even like a trade where you win 52% of the time is like really crazy, right? Like for me, with as much edge as being an informed trader provides, we're maybe hitting 50%. Now that's with the winners being, really letting winners run, but still, you get what I mean? It's crazy hard. So almost any way that you look at the market, it's going to be very difficult for you to differentiate it from noise. We've found some ways in which the market is different from a random walk, but generally speaking, it's going to look like a random walk. And when you look at most noise trading methods, they generally involve taking advantage of ranges and so forth to provide you to kind of take on risk and use that to convert it into profit, right? Like if I know that the S&P 500 is rotating around 12 ticks on average here, and then I go in and my stop is a lot larger than 12 ticks, then, and I'm just scalping that range, then I'm really likely to get my trades, right? But then I have fat tails. Because when I do lose, I lose more. And the statistics are still going to come out. Is just you will need more samples to see it. Now, you might be able to have a little bit of an edge to know when those fat tails are coming and avoid them. Then it's risk management, right? But that's noise trading. So, is it really that difficult to make 4 ticks consistently? Well, you can see Ace, he comes and he only asks for 2, and he can do that almost every day. But sometimes he'll come in and he doesn't get it, and he'll lose quite a bit, and he just is like, okay, this isn't my market, and he has to quit, right? So he still has to manage the risk on it in some way, and which is hard to learn, I think. And the whole problem is you come in and start making 2 ticks consistently, and you'll say, okay, I'm just going to do only that. And then you have the month that's bad. Then what do you do? Right? Yeah, ES is still pushing. I think we were saying the target was like 45. Like we know a good chunk about trading pivot areas, where absorption is, where value is. Is it really? Well, but not really. Like that's the thing. So pivot areas, for instance, if I come in and I can define the pivot in a couple of different ways. So one could be that if we have a move of more than X ticks the other direction, then we've had a pivot. Like, so the market's moving up, and then if the market moves down more than 12 ticks, then I say that that's a pivot, and at that point I can take a short, right? Or another one is when we have a bar that is where the close is above or below the previous bar's high or low, right? Then that's what I call a pivot, right? So I've done studies on both when I go in and I do a pivot. And when I do studies on that, there appears to be statistical aberrations in there. Although I think that it is probably more likely that I just don't have a large enough sample. Because even after several years, you're actually not going to have that many samples with these sorts of trades. It takes a really long time to backtest too, right? And what do I find? There is nothing in it that really suggests to me that there's any significance to them. They're really not. I found a study once, somebody was trying to argue with me, and they said, oh no, support and resistance is totally a thing. Here's a study that says that support and resistance does happen. And when you go in and you read the study, you find out that they only saw support and resistance work over a time period of 90 seconds, which meant that if there was a price that was support, that you could trade that price as it continuing to be support for 90 seconds afterwards, and there's a small edge. Which, what does that tell you? There are icebergs out there, right? That's basically, they're finding the icebergs. So is that really a great trade? You know what I mean? All of these other things, no, I've never found anything in any of my backtesting, and I've done a lot of backtesting. I've never found anything in my backtesting that suggests to me that you're going to become a millionaire from trading some technical edge that you find. Nope, sorry. Maybe it exists, but I haven't found it. And I guarantee you that it's not going to be out on anything that you read in a book or is out there on the internet. If it exists, it's going to be some really sophisticated understanding, and maybe even machine learning necessary. Now, there are some things, like there are some edges that you can find that really truly are. Like there really is a statistical edge in there, right? So for instance, pair trading arbitrage, right? That these two assets tend to be correlated, and if they diverge too much, then I trade them coming back in, right? And that's how a lot of these market making robots do things. A lot of how they're deciding whether or not to take orders or not at a location, a part of it has to do with what the other correlated assets are at the time. That's why you'll often see these situations where it seems like this price, they keep holding it, and then all of a sudden they bust through that and like nothing trades it. And why did that happen? Because the other correlated asset was moving and the robots don't want to take the fills there anymore. Okay, so those are totally like real inefficiencies, but they're very difficult to take advantage of because there's so much competition for them. So you can become a millionaire from trading a macro edge. I think you can. I think you can. That's so. From what I haven't spoken with them directly, but I've heard through the grapevine that the best traders at Axia, that's basically what they're doing, is they're trading a macro edge. They're also trading a large number of contracts and doing market making kind of noise trading, but the real money is being made from trading news. Are they becoming millionaires from it? Who knows? I see. Are you only trading market inefficiencies? Well, in an ideal world, I would think yes. Obviously, sometimes I take trades where I really don't have an edge. So I guess to some extent, if you're a retail trader, there's always going to be a little bit of noise trading, which is why the noise trading stuff is still, I don't just ignore it, right? Because I think understanding how a guy like Ace, for instance, has been as successful as he has is going to be really useful to you, even if you're an informed trader, right? I need to look at the camera when I'm talking. But yeah, when I take a trade, I really want to have a reason to think that it's going to go in the direction that I think it's going in. Right? Like I need to come in here and say, I really think the yields are going to rise today because all of the economic numbers that we got were relatively good. And because we're just in a rising interest rate environment. So I want to see rates rise, and I'm looking for an optimal location to get in. Right? And then that's where you often hear me say like, oh, well, I missed it, because the whole time I'm stalking a short. And I'm just waiting for a spot where I can feel confident getting in and not have a whole lot of adverse excursion against me. Well, it looks like the 10-year is going to push a new low a little bit there. So now there's definitely, we would have gotten filled at the 20, but it wouldn't have been worth waiting an hour, would it? No. But the real test is going to be, because like I said, they'll probably go after I'm gone. That's what they've done all week, at least. Would Ace's success go against the principle of market taking away technical efficiencies? I don't believe that it does, but I think that would probably still have to be a question that we haven't really been able to prove. So it seems like Ace makes him. I haven't looked at his statements lately. I mean, he's never shown us like multiple years worth of data. I mean, it'd be useful. I think that would be a little bit too much to ask from him, right? To see, because he does trade. He has an entry condition. He has a very specific entry condition, right? But the thing is he changed his entry condition. The ones that he originally told me, I don't think he uses that anymore. In fact, I know he doesn't use it anymore because it's not the same price. He's using some other indicators and stuff to try and get a better price. And some days it's actually he's picking a much worse price than what I get, right? So the issue is when you look at his results, where does it come from? Can you prove that it's really the signal that he's getting, or is it more just the fact that he's taking a really tiny profit? And I'm saying it's probably mostly the teeny tiny profit that he's taking, and that he could probably get away with doing this with a large number of different kind of signals, because the signal's not actually providing edge. The signal is just allowing him to be consistent, right? But that's a hypothesis, because I don't know how you would prove it. I don't know how you would prove it, because I tried to prove it wrong. I tried to go, okay, so tell me what the signal is and I'll backtest it. I backtested it and it said that it didn't work. Well, he doesn't do 2 ticks for a 10-point stop. No. He does like, he goes for 8 ticks with an 8-tick stop. But he scales it out, right? So like he takes a couple of contracts and he takes most of them off at that first stop, and then he lets the rest of them run. And that gives him a lot of room to really catch a runner. So even though he might really only be hitting 45% winners on those, a good portion of those winners do end up being really good runners. And that's where the profits are derived from, right? But that again, that does have a fat-tailed nature, because you could get a losing streak that could be very brutal. Like one way of looking at this sort of thing is you look at your strategy. You say, I have this, on average, I win this much, and on average, I lose this much. Okay, so if I lose 8 ticks on an average trade, right? What is going to happen if I lose 20 times in a row? Because when you start really going into the stats, that's probably going to happen at least once in your trading career, actually. Just from random chance that you could lose 10 to 20 times in a row. And, would your account survive that? And I think in most cases, most people, they don't. And that's why they don't keep trading. Right. Okay, so some icebergs at 7.5. I don't know. Like the issue that I have in the treasuries this week is that even though I expect them to go lower, it's kind of like this systemic short sort of a thing. So like everybody wants to go short, and so you end up with these like backwash moves that make no sense and are really annoying. So especially when you get down to like the low of the day and you want to try and sell it on it going a little bit further, the trade just doesn't necessarily make sense. It's here. Should check Twitter. Well, it's time for me to get going. Is there anything else we should say before we get going? The target for the VIX is 45.45, so there could be another 15 points in it. We'll see. But I did pretty good. So one of my better days, right? I mean, I did lose a last 45 on my first MES trade, and then I made 82. So in the end, I only made $40, and then I made 16 minus 1, so $15 on my live. So, pretty good. I'm happy with it. I'm happy with it considering the day that it was. It was more than I expected. And I enjoyed talking today. I talked a lot today. Hopefully I'm still feeling good tomorrow, because I might not. I might be really, like, Friday and Monday and next Tuesday, I might start to be really, I don't normally consciously realize it, but it really does affect me, so. Pelosi on Ben and the committee is seeking information that is central to the investigative and legislative purpose of the committee. There may be a legislation. Okay. If you say so, Nancy. All right, guys. I'll see you tomorrow. In the meantime, stay profitable, friends.